Hello everyone, this is Sam Wong from Finance Analytics Services Team LLC again. I know the market has been very volatile and a lot of people will concerned with, basically a lot of FAAMG. When you look at it, the last month compared now have been down about 20%. So with that, I also at the same time, there shaped opportunities, and today I want to introduce two stock that I kind of recommended for you to consider buying. And again, just you have to think about it from a long-term perspective rather than day trading. But they both of them are actually reaching the bottom of the 1 year low. So if you were thinking the market ahead buying at a dip, this could be also the stock to consider. The first one is probably a lot of people, if you have kids, have heard about it, called Roblox, which is one of the very hot company that went IPO last year around March timeline. The company operates human co-experience platform called Roblox platform, where users interact with each other to explore and develop user-generated 3D experience. The company operates the Roblox platform as live services that allow users to play and socialize with others for free. There are really a lot of people and grown people that actually join this company and probably play around with it and install in their application or phone or iPad. The year high, when you first started the IPO, the first day is for $40 to push it up right away almost to $70 the next day. And then you continue with the momentum and drive very well with the users increase on the platform and looking at the future, possibility of continued growth. So you actually drive up to a year high of 141.60, and now it's actually reaching a year end low, or actual all-time low 29.52. So the stock, what is attractive about the stock is since it was so new, so you're not getting really a PAC ratio or very good on that. But earning per share for a year last year was still at a loss of 86 cents. A projection of 2023 probably still operating in the loss. However, the subscriber have been very exponentially increased, so it gave up a very good opportunity. So here's something. Revenue has doubled in year 2021 versus 2020, and we're in 2022, which probably seen it will continue to be growing. Operating cash increase since 2018, increased year over year. This is the pictures that gonna give you some idea, pretty good idea about how well they're doing. So if you look at the graph on cash, they definitely 2018, stopped the company in 2021. The operation, the cash, you can see really have been increased. Of course, that also have been increases because of the operation of the business, but equity also at the same time also have increases as well. So, this is really positive side of the company. And also, what is different than other startups is that there's no risk of bankruptcy anytime soon. So if you look at the cash they have on hand, and if you kind of trying to look at the current ratio, which is current asset compared to current liability, it has better than 1.73, and quick ratio is 1.53. So these numbers greater than 1, they're pretty good shape. If you do the current cash against the liability and how it was burned, it's going to take you about 6 years for the cash to run out. So the company is very robust to telling you that it's not going to be having issues with other companies that even with frac rate was hiking, they're still going to be able to survive in that environment. The increase in investment expenditure also used for future growth, and that's why the money that they kind of too premature for comparing the with the industry standard, for sure have really good potential growth. PET ratio definitely going to be bigger than 1, but it's not available because of the short term. It's very hard to get that data. So depending on where the report you're trying to read, analysts actually giving this a buy, moderate to buy, and you have prices which is low end at $32, obviously is already lower than that if you look at the current price, and you give an upswing of $62 for most of the average from the analyst to extreme $100 back to $100 So analysts actually predict a 93.52% increase going to be from this point at the low end. And earning again for the next quarter is still anticipated to be operating a loss. But again, a lot of these companies, the growth company, look at Amazon, looking back to Amazon, Facebook, they're all talking about subscribers and the future of users and the growth opportunity, and eventually, the platform mature enough to really make money. From a PE ratio, they're not very. Then from a book market value ratio 29, they're not very bad, and price sales ratio is 9.68. So giving you the idea that this stock is not very bad, and debt equity ratio 0.62. So they definitely have pretty much equity on their book. So again, why buy Roblox? Roblox IPO was at $40 and currently trading under that price. Reference continue to grow and continue diverse use of the platform. For instance, they actually work in virtual space with Metaverse, which is Facebook. So that is a really good space to grow in the future to get more users. And at the average price, again, the analyst is looking at $61. We have seen this company before turn of things around, and when they had reporting bad earnings, and then they will actually have a good earnings surprise in the Wall Street, and momentum drove the stock. Not the last quarter, but the quarter before, from witnesses of $70 and driving back to $95. Despite at that time the market of high tech was actually flat and wasn't, or some of them actually drove down, and they rebound back from $70 to $95. So the two, again, just want to quickly capture and show you a 2-year chart as well, and you can definitely see that the price at very high end of last year, you hit them $130 at this point, and then you were slipping back. But you can see that when you were dipping to last time was $60-ish, around that time you bounce it back, and another time is flipped at $40, it bounces back to $50 pretty quick, and this is really within a month or 2 weeks to turn things around that pretty quickly. This one also turning things around pretty quickly. This part also turned things around in a month quickly, and this one take a little bit longer time, about 2 months timeline as well. So this stock, you can see that there's a lot of some volatility with V shape, but you really get the opportunity that they're going to make an announcement May 10. So if the announcement of the earnings and the subscribers are better than estimated, then probably like Facebook as well, which had the increase of subscribers, the quarter earnings announced, and driving the stock will be potentially going back to $50 or more. So I definitely encourage that this one to be looked at. The other one I'm also very attractive to kind of look at is PayPal, and the stock have a long history, and 5 years high, which is actually last year I hit 308.53, and 1 year low is 82.61, which is right now is at the dip. 5 years low is 47.54, but you have to consider that the revenue at the time of 2018 of PayPal and also the users were not even near clearly closer to what we have right now. So just to show you the graph of the pricing again. So you have some changes and some dip and bounce back, but last year the time was $300. So if you think about a stock at $300 now trading below $100, right, then it's really giving you $200 of really huge discount, and I think this stock, the one attractiveness of the stock is making money. It's not like Roblox still losing money, so it may take a couple of years to go back. But think about Minecraft too. So I'm seeing the opportunity that Roblox may get bought out by something else. So if you bought it at the dip at this point, let's say it will slip it to $25. When you bought it out, just like look at Twitter, you're always gonna have a market value that acquisition price will be a lot higher than the current market value. So potentially some stock you see probably gave you twice, 2 or 3 times higher, which could be, if you got bought a Roblox maybe will be at $70 or $100, who knows, right? Because it hit in the 52-week high is $145, just bear that in mind. PayPal also have a PE ratio not too bad, 30, which is kind of fair. You have a PAT ratio 1.66, earning per share, they are making money, and last year was $3.52. So I can see the stock have a pretty good potential. They have a lot of cash on hand. And then market book ratio is only 4.95 compared to Roblox is lower, and price sales ratio is very attractive. It's at 3.9. So it's only showing 4 times higher than sales of the current prices. And some of these stocks, if you look at compared to Amazon or other stock, you will see this was a lot higher. So they are actually better than the industry. And what is PayPal company? PayPal is a technological platform that enables digital payment and commerce experience on behalf of merchants. It operates in global level, connecting merchants with over 200 markets. Its clients include PayPal, Braintree, Venmo, Zoom, Settle, Payly, and Similarity. And with the company help merchants and consumer connect, transact, and complete payment. You also enable consumers to exchange funds with merchants using a range of funding sources, which may include a bank account, meaning basically this is just a MoneyGram. You also can send money to your friends, and also they also last year they engaged in cryptocurrency. So you actually buy cryptocurrency through PayPal as well, like Bitcoin, which I actually have some in the account right now, but not much because I want to try it at the beginning. Just to see how well the platforms. And of course, they have a competition after that. Different platform also on board. So this business starts to be, just one of the revenue from them, but it's not a major one because there's other competition after they started that. But most analysts predict 52% upside of the current price, $82 right now. So it's definitely reaching about $110. And a very high side, it will be $240. Again, the stock have $300 back. So why PayPal? PayPal, the stock actually lot transactions and traction lately, but remain profitable. That's really the reason. And also, you look at the earning analysis. Again, if you look at the balance sheet, they're pretty healthy. Income revenue has continued to grow, and cash flow also continue to grow. And that's one reason. You look at the earnings history. They actually grow into 310 to 388 in 1920, and the 460 in 2020 a little slip. So and then they are forecasting continue to grow in 2023. Currently, the target is over $5 a share for earning. And also, the return on equity is over 50%, while return on investment is over 10%. So it's not, it's from a returning perspective, is actually pretty good. Which is a very good numbers. And the other thing is when you compare with analysts have a pretty good review, say we're actually a buy. Again, the downside was at the point just April 29 analysis that actually the downside was $85. We actually really hit lower than that, is really at the year low at $82 something. So we definitely have the potential to rebound. And also the average you have $140. That's kind of projected in the average of the analysts, but out of that, if some analysts predicted at least very conservatively, you will go back 50% higher of the price, which means about $110, $120. It is still a buy, and one of the company new construct actually saying this stock is pretty attractive, and based on their rating, they have a pretty good economic versus reported earnings per share. Return on capital, invested capital is top quartile, and return EBV ratio is not bad. So, and the other thing is when we compared with the peers, which is in the graph show you, that if you look at 3 years timeline, then definitely SQ will be a better, very strong return compared to PayPal. PayPal actually not as good as compared to other competitors. But if you look at the recently 1 month, you can see that PayPal actually have the stock have dropping down, but actually not as bad as SQ. And if you look at the week, just the last week, you can see that PayPal actually performed a lot better from the return perspective. It actually beating up other competitors. So from a week perspective, from a 3 year perspective to a last week perspective, you can argue that because the stock got beat up so badly, but you can clearly see the rebound and catching up and actually outperforming the competitors, if you will, or industry, the same industry. If you compare with these company and they actually performing and giving a better return, when also, though the other highlight is though Mastercard has over 300 billion market capital compared to PayPal 110 billion, PayPal has a larger revenue than Mastercard. Earning growth year over year was 25%, which outperformed the peers. This may indicate that the stock has oversold. And again, this analyst still give very strong rating, and I will tell you, yeah, besides SQ, PayPal would definitely be the one to consider. SQ actually got beat up pretty bad as well last week, but then you can see the momentum of PayPal's probably, I would say, after the reporting of and driving the market down, this one will have a pretty strong potential. So our the number again, the highlights is price sales ratio 3.9, debt equity ratio 0.42, not bad. P ratio 30 is around the industry. PAT ratio 1.67, which is a little bit conservative, probably higher than that. They have positive earnings, they have a lot of cash. So those are the things that, from a valuation perspective and from a selective of the choices, I think PayPal will be a one that's going to beat the competitor. Thank you very much, and I hope that will help you in the long run. That if for those who listen to my video, which recession will typically take about 18 months to 3 years to recover and bounce back from there. Then this stock potential will definitely at that point I see a very optimistic view of continued growth and will actually bounce it back to $150 in my opinion. Thank you very much.